Forex Chopper here. This is my first video on YouTube. I will just be going over, market structure, how I view it, how I trade. The channel itself will be about, me, my life, my lifestyle, how I trade. It's mostly going to be about Forex. It's going to be a learning channel, a channel where you can effectively learn the way I trade, how I see the market. And I'm going to try to see if I can break down things in a more simpler format to make it much easier for you guys to be able to effectively trade these markets. First off, I do have to let you guys know that I am not a financial advisor. Everything that I'll be putting on my channel will be purely for educational purposes. Make sure you backtest these things before you do anything. Make sure you backtest it, guys, because you don't want to, and make sure you backtest it with your demo account. You want to understand what you're doing before you put any money into these charts, because trust me, you definitely want to do that, my guys. So just definitely like, share, comment, leave your comment in accordance to what you'd like to see, what you'd like to understand. If you don't understand something, leave your comments. I'll be reading through all of them, and try to explain things as best as I possibly can. So yeah, let's get into the video.
I'll keep hustling.
So one of the main things I want to discuss with you guys today, as in accordance to market structure, is the fractal nature of the market. Now I want you guys to look at my red path tool right here, and just think about the red path tool as being the 4 hour, the 4 hour movement, the movement on the 4 hour time frame, and then look at the inner path tool, which is this part right here. We can see the higher highs, higher lows, stuff like that. Think about it as being the 15-minute time frame. Now the idea is the same push, this same initial push you're looking at from this point here, from this low here to this high here, is just the price action in between these areas happening. Like you're just seeing the price action happening within these, within this push. Now, one of the things that I'm not going to get too deep into how I enter the trade in this specific video. I just want you guys to understand market structure, market flow, order flow, how price delivers basically from a market structure perspective. Now, market creates a low right here. Then this initial low pushes up and creates a high. Now from that high, it pushed down and creates a higher low. Now this higher low then push past this higher high, now creating this technically is a high. This technically is a high point right here. It's not a higher high, just call it a high. Right? Now because this low is higher than this becomes your first higher low. So this is your first higher low because it's higher than this. Now when the market push past this high, this point now becomes a higher high because this high is higher than this high. Now price then retraces and creates another higher low, and so on and so forth. Now how I want you guys to be able to see the market from my perspective per se is like this, right? Watch this. Now the job of a higher high or a higher low is to take out its counterpart. What I mean by that, let me get into it. Now the job of this higher low is to take out this high. Now looking from this high, from this higher low to this high, did it do its job? Yes, it did. It gave you a break of structure right there. So this higher low now is supposed to be a strong, protected higher low. So we want to understand that price can know when this swing is created. So from this point here to this point here, once this leg is created, that price can pull back anywhere within this point, within this swing, and still maintains its bullish momentum. Once it does not break below this low, it's still bullish, right? You're still going to be looking for your buys. Always trade with the trend. The trend is your friend. Trust me, guys. You want to always be trading with the trend. If you're, when you get a bit more advanced, you can start doing counter trend trading and stuff like that. But for now, if you're a beginner trader, you want to be mostly focusing on, trading with the trend. Now, this is the thing I want you guys to really understand now, in accordance to how I see the market, how I view the market. Let's just get this let's just get this off for a second. I don't want to get you confused. I get you guys confused. So, as I've mentioned, the job of a higher low is to take out its counterpart, which is a higher high or a high in this case. So once it is that it is doing its job, then your market is still within a bullish or a bearish momentum. Now the higher low here took out this higher high. Higher low here took out this higher high. Now then when the price came back to this higher low, it broke it. What it's basically telling you that is, one, the amount of money that was put into the market here, from this point that gave you this initial push that keep basically tried to kind of like give the shift here to give you this initial shift below these areas, was much more than what was put in here. So the amount was put in here was stronger than what was put in here, but not stronger than what was put in here. Let me go over that again. I want to make sure you guys get this. I'm going to try if I can go as slow as possible, guys. I'm naturally a very fast talker, so it's a bit hard for me sometimes to kind of slow down. I'm sorry. If it is that I'm going too fast, guys, just rewatch the video and try to understand this. I want you guys to really get this. So the job of this higher low was to take out this higher high, right? This higher low did its job. Now, being that this higher low did its job, it's supposed to be protected. It's supposed to be strong. As I mentioned, price can pull back anywhere within this leg, from this low point here to this high. It can pull back anywhere within it and still maintain its bullish momentum. But once price breaks below this, that shows the market is shifting. That's why we have this CHO. CH. Some people call it church, some people call it catch. It's change of character. Whatever you want to pronounce it as, this is what the change of character. Change of character meaning the market will, is shifting. Now, once it is that you see where the amount of money, as I said, that was pumped in the market here was much more than what was pumped in here, but the amount of money that was pumped in here was more than what is here. So that's why it was able to break past this, and then this breaking past this. Now, it's just to understand the flow of the market. The market will not go bullish forever, because if that was the case, well, it just wouldn't make sense, to be honest. That cannot be the case. So, you have to just understand that the market will continue doing its breakout structure and then do the same thing on the next side. So this is from the perspective of a bullish market. Now let's see from the perspective of a bearish market. Now this is a higher high, or in this case, being that it broke the structure, now this is just considered a high. Once it's changed its character, this point is now a high, and then this now is going to be a lower low, right? Or a low. Right? When market pushes up, creates a lower high, which is a point that is lower than this high. That's why you have it as a lower high. So once market creates this lower high here, it breaks now below this point, and then you get your breakout structure. Now this is technically still a breakout structure, but to kind of have the concept down properly, you want to just label this as your change of character. Say, okay, well, since price break below this, the market is now shifting to bearish, bearish territories. We want to kind of understand that it's now in bearish territories. So now that you've understand that, now you're looking for a breakout structure to have your confirmation. Not all the time the market will always, sometimes the market will give you a change of character and then do this. So you have to be mindful of that, guys. That's why you wait for your breakout structure. So your change of character first, then your breakout structure. That gives you, reason behind why you trade. So for me, guys, I like logics. I trade with logics. I trade and then think about the logics behind this. If it is that the amount of money that was pumped in here was more than the amount of money that was pumped in here, that means the market wants to shift. That's the logic behind it. The logic is the market is going to shift. So now, why would I be looking for buys still when the market is obviously shifting? That makes no sense. So when, this is not the stock market where you're just buying all the time. This is the forex market. You want to be able, this strategy also works for the forex, for the stock market also, or understanding market structure like this is also for the stock market also. It's just a case where it's just understanding the structural point, and that you can trade the forex market, understanding the structural points and how price delivers basically. Now, so after you get your initial lower low being broken, now that this lower high is a protected high. So let me get my tool again. That this lower high is protected, so any trades you want to take, mostly your stop loss is going to normally be above these levels. Now, obviously, when you refine it, it's not going to look like that. Trust me, guys, it's just about understanding the concept right now. Let's not think about the entries, to be honest. So you know that price can pull back anywhere from this point to this point. Price can pull back anywhere. So it pulled back and it pulled back to this point and then it dropped again. It's the same thing here. So this is a protected high. You want to see price pull. When price created, it creates its initial breaker structure here. You're not in the trade yet. If you're in the trade, you would have been in this trade. No, you'd have exited. Maybe you see an order block down here, and I'll get into order blocks, guys, for the next videos, but we're not going to get into that now, but and targets and stuff like that. But the idea is to understand that price can and will pull back in any area here. Price can pull back here and drop. So the idea is price didn't have to come that far. Price could have pulled back there and drop. Price could have pulled back here and drop. Price could pull back here and drop. Price could pull back even here and drop. As long as price doesn't do this, you're fine. You're still bearish. So price can pull back anywhere within these points and you're still considered to be in bearish territories. Remember, understanding your swing highs and your lows and your basically your pullbacks, understanding them is very critical and crucial as to how you view market structure. I have this little tool here that I created. I call it RTR. I'll be sharing it with you guys, but it's not something that I will be sharing as yet. It's just something that you guys can look forward to. It basically shows you market structure, which I created. You can go check TradingView. You will not see this. But as I said, you can definitely go ahead and check out TradingView and see if you see it where you won't. In any case, so yes, we're gonna go ahead and show you this on the chart. If it is that you guys don't understand this, just go back over the video, replay it, and if it is that you guys just truly don't understand it from the initial explanation I just gave, drop a comment down below. I'll go over it again a little bit more in detail, covering grounds on things that we need to kind of like go over in accordance to what you guys don't understand in accordance to it. So yes, let's go ahead and check out the live charts, and then we can get into a little bit more understanding here on the live chart. So let's go, guys. The chart. So let's go on the charts and see if it is that we can see what we've learned, right? Now we're currently on GJ, Great British Run versus Japanese, and we're on the 8-hour time frame. We're just gonna use the 8-hour time frame for now. Let's take this up. So the previous analysis. I'll actually go over that at the end. Now you can see where the market is initially bullish. So you're gonna be focused because the market is going up. Obviously we kind of got this bullish momentum, even though we're in a little range right here. Even though this area is just kind of like range, it's not directly going up. If you're looking carefully, you will see where the market broke structure right here. So it broke above this initial, what we know on the chart we're showing this is one of the higher highs, right? And this was a higher low, right? Now, one of the things that you have to understand, that price is going to still be bullish even if it is that price wicks below it. There has to be a close. So I'm going to show you first of all what I meant when I said that price can pull back anywhere within the leg of that structure. So this is the low of the initial this is the low of the candle of the swing, I should say, rather, right? And this low, the strength from here went above this high, and it took structure, like it took out this initial structural point. So we know that this is a strong low. So we want to see price pull back anywhere. It can pull back here and go bullish. 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 So the point is, it just needs to not pull beyond this. It should not go below this and close below it, not wick. Wicking below it is fine, because you're not just going to enter the trade as soon as it goes into this little gray box right here. And this, as I said, is my POI. POIs I'll be going over. POIs are just points of entry, or points of interest rather, points to which I'll be looking for my entries. And then I'll show you how I just enter a trade. Just nothing, not the refined method, but just to kind of give an understanding of how I'd initially enter a trade with basic understanding. So as I said, with the bar replay tool right now, we can see where price, as I said, will be continuously pulling down within these levels. It's coming down. It can come, as I said, anywhere within this swing. And it's pushing, it's pushing, and you're still bullish on this. Until you understand how to trade counter trend, then you're still bullish on this. So you're going to wait for price to come to the point where you think it's best for you. Now you'll have POIs here. You'll have POIs here. you'll have POIs in a lot of places here, but your main area would be down in discounted prices. And when I say discounted prices, I have my gun tool here. I normally would use from the low to the high. Now everywhere up here is expensive price, and then down here is just consider it like cheaper prices then basically. So think about it, right guys? If you're selling something, would you not want to sell it at its highest price? Look at the price over here. Look at the little section over here, right? Now, from this high to say about here, the price for it, like if you're say this is a good you're selling, it's $156, right? Just say you're selling it for $100. If you sell it for $156, you're going to make you're basically going to be generating profits from that, right? And if you buy something, you're going to want to buy it cheap, right? So if you're going to buy something, you're going to try to buy it at least at $149, which is again over here, $149, which you're buying it at its lowest price and selling it at its highest price. So the idea when you're here listening to other persons that is trading forex and everything like that, buy low, sell high. That's the idea. So you're selling high, so you can make sure you're capitalizing on the best amount of profits, and you're buying low, so you can again capitalize on the most amount of profits. So, boom, price taps into the zone, immediately gives you a nice rejection. Now you want it kind of like the price is in the zone. That doesn't mean you're ready to trade it. No, you have to see a break of structure to the upside to say yes, the market is ready to go bullish. If you do not see that break of structure, you're not ready to trade. You're not ready to be in a trade, because imagine if you had bought it right there. If you had bought it right there, you're more than likely to probably put your stop loss right below these lows, and you'd have been tagged out of the trade right there. So you have to wait, guys, for your confirmation. So in most cases, my confirmation is more than likely going to be the last lower low created, which in this case right now, currently, maybe another one can get created, but currently the one I'm looking at is here, right? So I want to see that get broken and closed above. If I see a close above it, then I will know where. Okay, you see that's the wick below. You see there's a wick below, but we're currently on the 8-hour time frame. It didn't close, it just wicked below. Doesn't mean you're ready for the trade. Now, seeing that this was a lower low, I now have moved my lower low to this point, because this was a lower low, but then it broke this structure. This went down and broke this structure right here. So this, let me see if I can get my path tool to show you guys. So this lower low came up, it went down, it broke this structure. It came up, lower high rather, this lower high came up, then it broke this structure, right? So you can see where the market created kind of like that format. Now we want to see price break above this level before we consider to say yes, this is bullish. We're in bullish territory now. Now there it is. Now you now see that price broke, and where did the move start from? It started from this candle. Now there's multiple ways to trade this. I normally sometimes you can use the gun tool. It's a multi-purpose tool for me. I can mark out the last candle. I don't normally enter like this because obviously this is a huge gap. My stop losses are no more than 10 pips. I don't use more than 10 pips stop loss. If it does not allow me a 10 pip range, I do not take that trade. That's just part of my rule. Now that the price broke above this, I can see yes, I'm in bullish territory. Now, still not in a trade yet. We want to make sure we see price now retrace back down in these levels. Now we have two ways to enter the trade. And as I said, I'm not going to get directly in depth in how I enter on this specific video, but I will be definitely getting in depth on it in upcoming videos. I'll also normally mark out my last down candle before my last candle, basically that the candle that did the initial bullish move, which is this candle right there, and I'd be looking to see if price kind of pulls back within that zone, which it did. Now my trade entry would have been right there, and as again guys, my stop, this is a 49 pip stop loss, and I do not trade actually this is a 73 pip stop loss, because the stop loss has to be below this low. I do not trade like this, guys. I would have gone down to refine the entry, and as I said, I'll be doing that in other videos. For me though, I normally target order block. So my first target with entry there, my first target would be right there, right? Now this is not a bad trade. This is not a bad setup. You can target it right to the, you can even target to the 50% of the zone, but again my first targets are normally to this initial the last lower high that broke this structure is my first point of target. Now let's see what happens. Now we can see where price is going bullish, and again you can see where you could have gotten another entry for one right here. You can see where you got an initial break of structure right here again, which would have given you another reason to be looking for buys back down in these areas again, right? So you again up first take profit hit. Now you can either be trailing your stop in this case, close out some of your position. Guys, always make sure you take some of the money out of the market. You did not give the market any of these money. Try to make sure you always capitalize on your profits. So my next take profit point will be up here. After I've taken profits here, I'd be looking to take profits up here again. And let's see if it hits. Okay, yes, it hits again. And then my initial other take profit and our rather trailing stops would be up there. If remember, price doesn't have to do anything, it's just about you putting probability in your favor. Now you're gonna see where price probably go higher, or depending on what happens, and I with the actual method of hindsight, I actually knew that the market did not go this high, but obviously I wouldn't know that, right? So I wouldn't know where the market is gonna go, so you have to put it where you think. Now obviously the first thing you have to understand, if you're trailing stop, your stop loss needs to be below this low. So if it is that price is now going to go bearish, it needs to break below that. And if it's going back bearish, now you can say, okay, now the market is shifting, you definitely do not want to be in that trade. You close out all positions and exit the market with your profits taken here, and probably profits taken here, and then you just close out any other running positions that you have once this higher low is broken. Now, and then the market starts to shift again, where you get your initial change of character, break of structure, however you want to see it, change of character here, break of structure here, and then you look at your initial point where you can see price may retrace into, and look for your initial sell setups again. Price can retrace back into this level. This is where the break of structure happened. Didn't come there because it didn't give you a confirmation there. This is why these points are just POIs right here. Let's go back. And I'm doing this raw, guys. I don't want you guys to feel like I want you guys to understand I'm doing this raw, right? I want you guys to understand that the markets, like right here, you don't just enter sell because it says sell, right? Because the market is bearish. Because this POI is valid, and this POI is also valid. So it can change, it can go back bearish from any one of these levels. You see? All of them. See, this one didn't break the structure. Now the main thing you want to see is price breaking below this. It didn't do that. Now, what can we see? We can see here where price needs to, again, once it doesn't close above it, the zone is still valid. So once you see a break below this level here, this is the break below level here, you get your break of structure right there. Well, it's not broken as yet. No, it's not broken still as yet. Still not as yet. Well, now it's broken. Now this is your break of structure right here, guys. Now these areas anywhere within this last up candle can be your your point where you're looking to kind of look for yourselves. And here we go. You got top 10 right here on the 50%. As again, guys, I will be going over this much more in details. I just kind of want you guys to understand the fractal nature of the market, and then you're having your take profits. The first take profits would have been to this level, and it's just really understanding the flow of the market. It's just really understanding the flow of the initial markets, just like that. If you know what I'm saying. So understanding that even when you get a break of structure, like right here from this initial last down candle, it does not mean that it is time to buy. It just means that it's possibly time to buy, right? So you could be looking at and say, oh yes, I'm going to buy right there, and then boom, you either got wick out or you get a little profits, a little well. It's this is where price is at currently. So and then price, you'll be moving your stops, moving your take profits and stuff like that, depending on how you trade. But I just got, as I said, guys, I want you guys to just truly understand what I'm getting at. Price can pull back anywhere within that leg of structure and still maintain its bullish momentum. It can pull back, and again, I forgot to say this. Now, look how this broke this structure. You notice that this leg did not break this structure, which means that this is weak. So that means price can now trade back down into this zone and break below it, right? The only thing that could hold it up is this zone from over here. But the fact is, price can go back bearish, and from what I'm expecting with price currently, I'm expecting price to continue breaking through these levels. I don't think price is going to turn back here. I feel like price is going to break and come below these levels, come to at least these levels again for either more to go back bullish again, or to continue on going back bearish to kind of clear and mitigate these areas. So other thing, guys, if you understand to see, maybe you will see where how head and shoulder patterns form. This is technically a head and shoulder pattern. In technicality, that is a head and shoulder pattern. Head and shoulders will never come perfect, they'll never come exact, they'll just look similar, or it's just going to be a point where this is the head, this is the shoulder, this is the shoulder. It's just you understanding that once price breaks above this point, this no longer is a valid head and shoulder. So this is the end of this video, guys. I just want you guys to understand, as I said, the flow of market. If there is any questions you have about my chart is very messy. If you have any questions about in accordance to how I view the market and what I've mentioned in this video, just drop it in the comment section below, and I will definitely basically make a video again on how I see the markets. Until next time, guys, have a good one.
I'll keep hustling.